It's the Real Estate Podcast, across every state, city and town of Australia.
And welcome to another episode of the Real Estate Podcast, available on iHeartRadio every morning, also on Spotify and Apple, and wherever you get your podcasts from. It is a Wednesday morning, the 13th day of July for 2022. Coming up this morning, we are looking once again at the Sydney property market, which could be described as a split personality with some of the tricks around property prices at the moment in Sydney. It's a Houdinian act, and we'll be talking with Shannan from BresicWhitney Real Estate and finding out some of his comments in terms of what is going on. If you saw the movie Bohemian Rhapsody a few years ago, they reenacted in the film Live Aid, which still stands as one of the best concerts of all time for a lot of different reasons. And it was on this day in the history books, 1985, that took place. Concerts were held at both Wembley Stadium in London and John F. Kennedy Stadium in Philadelphia. It raised over $70 million for African famine relief, and Bob Geldof was the one that put it all together. And if you're celebrating your birthday, Patrick Stewart, Captain Picard from Star Trek, he is turning 81 years old. And Indiana Jones, Harrison Ford, not far behind Patrick Stewart, he is turning 79.
Grab your coffee and switch on your real estate breakfast every weekday morning from 6:30. It's the Main Centre forecast with propertybuyer.com.au.
And looking at today's weather, first we go to Sydney, expecting some scattered showers and a high of 17 degrees. Grab the raincoat and the brolly because the showers are back again today for Melbourne. 13 is your high. Brisbane expecting some morning fog, a dry day and some windy conditions, your high of 20. And in Perth expecting sunny blue skies and a high today of 22 degrees.
From first home buyers to property investors and everything in between. Every morning on the Real Estate Podcast.
Well, Sydney is still pushing the price boundaries in a favourable way if you look at some of the recent sales across the last couple of weeks. Even though Sydney's auction clearance rate dropped last month to 52.1%, smaller blocks, even two-bedders, are maintaining pretty strong price points. And this evolving market probably is unlike any previous property cycle in modern times. It still has this yo-yo effect of surprising and surpassing and going against some of the predictions right across the landscape. But, as some people would say, that's property. So let's welcome to the Breakfast Podcast this morning BresicWhitney's agent and principal, Shannan Whitney. And good morning to you, Shannan. Welcome to the Real Estate Podcast.
Good morning to you, Craig. Thanks for having me.
You've been around long enough, I think, to have seen a few property cycles. Is this one a little bit different to the others from your point of view?
Yes, so 28 years in the Sydney real estate market, and yes, I have seen quite a lot of strong and bearish markets and cycles. So the difference with this particular cycle is probably the speed of the deceleration and the erosion on values probably come down faster than I've normally seen in a down cycle like this. However, coming off the back of the previous cycle we've just experienced, which was one of the strongest bull markets and value rises we've seen in Sydney, you could probably understand what goes up fast probably has to come down quite quickly too.
Yeah, that's interesting about the speed, because I want to come back to the point about the clearance rate being 52.1% versus some of the positives, because it really has, doesn't it? It's got this Jekyll and Hyde property market feel about it.
It does. Yeah, it does. If you stand back and look at the last 2.5 years in Sydney real estate, it's been a real roller coaster. You know, the run down the hill was a really steep, fast, aggressive strength in pricing and demand. And then when we reached the top, you know, and some of the macroeconomic changes and some of the social changes that had to go on, both in our domestic economy and also around the world, meant that the interest rate cycle changed quite quickly and quite ferociously. So to see, the values come down as quickly as it has is stark contrast to where we were, not only 12 months, 18 months ago.
It also feels like we're at that tipping point, possibly because of the RBA rises. You only need one more global event of some kind and the dynamics change again. And this is what is making this real estate cycle unique and possibly unlikely to repeat once we come out of this supply chain chaos, interest rate adjustments, the oil, and so the list goes on. It's just a real weird moment in time for the real estate property sector. I mean, so many people have got so many varying degrees of commentary on what is happening.
They do, and I think that plays, quite a significant role in the general market sentiment that has a great influence on, real estate, the performance of real estate as a category. This particular cycle, is no different. And I think to your point in terms of the current clearance rate in a place like Sydney hovering around 50%, I think it dipped below 50%. The current values on the buyer side is certainly having difficulty lining up with where the vendors are thinking values or where they're hoping value to be. So when you have that, disparity, which is what we have right now, you see clearance rates, come down under 50%, which is rare in Sydney. You don't see that very often.
And Shannan, tell us about a property that you sold, I think it was last weekend, which goes back to the point about Sydney prices holding their own. It was a two-bedder corner terrace site. I think it was sold well above the price guide. So tell us a little bit about that, because that's going against the trend, you could argue.
Look, it is. I think that, I call that still an example of cautious confidence from the market. We're seeing properties in Sydney either being priced according to the conditions or priced, above the conditions. Those that are priced above the conditions simply are falling into the passed in category, which is sitting at 50-odd%. Properties such as the subject property we spoke about, the auction price settings were in line with conditions. The demand and engagement on the buyer side certainly demonstrates that there's generally there's a market there. There's plenty of buyers who want to buy. But to your point, Craig, I think the lens in which buyers are making decisions are perhaps somewhat different at the moment than it was. Fully developed. All the fundamentals were very strong, car parking on site, a lot of capital invested by the current owners. The quality of the capital investment was very high, and the buying market certainly is seeing that the pricing is, certainly looking like good value compared to where it was 18 months ago. And as a result, you see clear engagement and competition from the buying market. So I think the positive to that is there's definitely buyers around. There's definitely buyers who want to engage and invest into real estate. But the real challenge is at what price are they prepared to do it?
And these terrace-type properties, they are, of course, very popular to renovate. Have you seen buyers pulling back on doing these renos currently with the current property market? Or are the great locations and solid number crunching, are you still seeing a number of people actively pursuing and engaging in the renos?
No, you're absolutely correct. There's a real bias towards fully developed property. There is a huge amount of uncertainty on the undeveloped side. You've got values falling, the market uncertain about how far they will fall, and for how long. And of course, you've got, the great uncertainty around building costs, materials, labour availability. So those things combined certainly see that the market is shying well away from undeveloped opportunities. That does buck the trend. That's normally the complete opposite, like Sydney, where undeveloped housing is really where a lot of the attention and the energy sits. That's where a lot of the markets see upside and value. And as you quite rightly said, the Jekyll and Hyde come back out. What a different world it is, 18 months later. And the subject property that we talked about was certainly one that had all those characteristics and therefore removed a lot of those risks for incoming buyers.
And just lastly, Shannan, how active are smaller developers that you're dealing with right now in this evolving market? What are they doing?
They're very cautious. And I'd say that if you consider a market like Sydney, which is considered to be one of the strongest, robust and best performing real estate markets in the world, I've not seen in my 30 years the small developer market as cautious and as uncertain around the risks, with purchasing, acquiring, developing and profiting from real estate in this cycle. It's the most cautious I've ever seen it.
All right, well, we'll leave it there. Good on you, Shannan. Thank you for joining us this morning on the Real Estate Podcast. No doubt we'll talk again.
Thanks for having me, Craig.
We connect you to the best real estate information across Australia. The Real Estate Podcast.